Well, welcome everyone on this beautiful, bright, at least somewhere the sun is shining Monday morning, and want to welcome you to the webinar. My name is Scott Irwin, and I'm joined by Darrel Good and Todd Hubbs here of the Department of Agricultural and Consumer Economics at the University of Illinois. And the webinar this morning is Implications of the USDA Grain Stocks and Prospective Plantings Reports for Corn and Soybean Prices. As we get started, just want to make sure that everyone knows that the slides for the presentation this morning are available in two places. You can visit the webinar site for FarmDoc, and the slides are up there. They're also available on your dashboard for this webinar to the right. You can find a link there and download a PDF copy of the slides and follow along with those. As always, we want to encourage the submission of questions. Todd and Darrel and I are going to talk for about 30 minutes, and then we will open up for questions. And we always enjoy those a lot, so please be submitting those. Again, on your right-hand dashboard is a place to submit questions, and we'll get to as many of those as we can. All right, we want to get started this morning. We're going to start with grain stocks and old crop balance sheet for corn. Then we're going to jump to the same thing for soybeans. Then we'll review prospective plantings. And then from there, we'll take a look at some early projections for the 2017-18 new crop balance sheets for corn and soybeans. This chart shows the March 1st corn stocks going back to 2007. The USDA report for March 1st, 2017 came in at 8.616 billion bushels. And clearly that was a large number, and that it was larger than in recent years is no surprise given the size of the 2016 corn crop. But the key number is to benchmark that versus what the market was expecting, and the average guess as measured by Reuters was 8.534 billion bushels, and that was once again a bearish surprise, indicating that stocks of corn on March 1st were bigger than what the market expected. And if we just look at that history of the March 1st corn stocks estimate minus the average guess, we see it here, and we see that the blue bars are bearish surprises and the red bars are bullish surprises. And the surprise for this year was a blue bar, or a positive 82 million bushels, meaning again that the market had underestimated stocks on March 1st. That was clearly a bearish surprise, but not anywhere near the largest that we've seen, which have exceeded 100, 200, even 300 million bushels. I think the thing that's really interesting to me in looking at this chart is the series of bearish surprises that we have had recent years on corn usage. And you can see this is the third consecutive year where we've had a bearish surprise on March 1st corn. And so we need to be thinking about that. And I'll have a little bit more to say about that in a few minutes. The real importance of the stocks number on March 1st, we're halfway through the marketing year. That allows us to get a read on first half feed and residual usage, because we know the difference in the stocks gives us total usage for the first 6 months of the year. And then we can subtract our estimates that we have from other reports for other use categories and back out a feed and residual number. And that number for the first half of 2016-17, as we measure it, is 3.776 billion bushels. And that comes in, pretty much very similar to the level that we've seen each of the previous three marketing years, moving in a pretty narrow range. That tells us that despite growing livestock numbers, that something is putting a lid on total corn usage, at least during the first half of the marketing year in recent years. And we think that's probably growing availability of DDGs coming out of ethanol grind. And in particular, in recent months, those have been very cheap. So we know that first half usage figure, and now the old crop uncertainty is, well, what do we project for the second half now that we know the first half number? And you can see we've got a gray bar there. That's not a particular estimate, but it's indicating that there's considerable uncertainty. And you can see in the last 3 years that we've gone anywhere from 1.2 to 1.6 billion bushels. Where will we land in 2016-17? And here's one way of looking at that question. This chart shows the relationship between the March 1st corn stock surprise and then the subsequent change in the WSDA feed and residual estimate from March to the final estimate starting in 1991. So the x-axis is the March 1st stock surprise, and then the y-axis is that change in WSDA feed and residual. And you can see there's a pretty wide scatter here. It's not a very tight-fitting relationship, but it does point to a negative relationship, and the slope coefficient of negative 0.4 basically says that historically, on average, the WSDA folks take a look at a stock surprise like this and essentially fade it by about half. So we were at an 82 million bushel stock surprise, and that this relationship would say that you would then drop feed and residual as a result of that bearish surprise, maybe 45 million bushels. Another way to look at the same question, given first half disappearance, what do we project for that second half disappearance, is to take a look at the percentage of the total feed and residual use for the year that the first half represents, and then use that percentage to back into the total for the year. What we have seen in the last 20 years or so is a big change, though, in those percentages. We see from 96, 97 through 05, 06, first half disappearance averaged about 64%. Then from 06, 07 through 2009, 10, 68%. 2010, 11, 13, 14, 74%. And the last couple of years, 70%. And those percentages, using those particular percentages makes a lot of difference in where you would come up with for total 16-17 marketing year feed and residual use. If you use 64%, then what we have consumed already, if that represents 64%, we'd be at 5.9 billion bushels this year. 68%, 5.552, 74%, 5.103, and 70%, 5.394. The current USDA projection is 5.550 billion bushels, or 5.550 million bushels. And so basically anything in the range of what we have experienced since 2010 would say we'd need to cut that USDA projection from 5.550. So we think that the USDA is going to cut in their next WSDA balance sheet, and we'll take a look at where we come out on that question. The red bar is the WSDA March 9th balance sheet, old crop balance sheet for corn for 16-17. And then the blue and red on the right column represents our projections where we think things will come out. And basically everything on our balance sheet is the same as the most recent WSDA balance table, except for that feed and residual usage, based on both ways of looking at where we seem to be headed on feed and residual use. We're going to go ahead and drop feed and residual use for 16-17 by 75 million bushels. So we're dropping from 5550 to 5475. Those 75 million bushels just get added on to our ending stocks, boosting those to 2395, and then boosting ending stocks and total consumption to 16.5%. But we're far enough through the marketing year, we don't think that that's probably a big enough change to alter the season average price of $340 very much. So with that, I'm going to turn it over to Todd to start on soybeans.
Thank you, Scott. So we're turning in the March 1st soybean stocks number. It came in at 1.735 billion bushels. So on this graph, you can see the March 1st soybean stocks from 2007 through 2017. As you can see, the March 1st stock number came in quite a bit higher than the market's average guess of 1.684 billion bushels. A bit of a surprise to the market, I think. And one of the interesting parts about the stocks numbers was a lot of this was on off-farm storage, which makes me start to think a lot of farmers are paying for storage out in the country on soybeans in a downward trending market, which may be something to think about as we move forward. Whoops, I keep hitting the wrong button. So, and when we look at the surprise, it was 51 million bushels. And over time, you can see the March 4th soybean stocks numbers, minus the average guess of the market. It's been up and down. There's no real constant trend. And this particular estimate was bearish quite a bit, one of the larger bearish numbers we've seen in a while, and I think a bit of a surprise. So as we move forward through this marketing year, I think some people started to question the size of the USDA's production numbers. I think I can speak for all of us that maybe that's not the correct way to think about it right at this point. But 51 million bushels higher than the average guess. The purpose of this stock's to sort of get the seed and residual. We have good numbers on the soybean crush and soybean exports. And so when we look at the total first half of this marketing year, we've got seed and residual at 158.1 million bushels, which is not too high historically, but it sort of gives an indication when we look moving forward. The USDA tends to have negative seed and residual numbers for each quarter as we move through the rest of the marketing year. And the expectations are, what will be the number in the end. Currently, USDA has 125 million bushels for seed and residual for the 16-17 marketing year. To get to that, they're going to have to take off some in the next couple of quarters. So as we move forward, I think when we look at our balance sheet for the old crop, what you see in this slide in figure 10, much like Scott said before, the first column's a 16-17 projection on old crop. We do not change any of our numbers moving forward. The crush number looks solid. The export number, which they've lowered recently, we're staying with that, and we're still setting the seed and residual at 128, which leaves us at the same total consumption and the same ending stocks of 435 million bushels. So for an average farm price this year, it puts us at about $960.
We next want to turn our attention to the Prospective Plantings Report and what that indicates for not only acreage of corn and soybeans, but total planted acres in 2017. This map we stole directly from NASS. This shows estimates of principal crops planted this year or intended for planting and the change from last year. And you see a mix of red, which is fewer acres, and blue, more acres. But clearly the consistent pattern is in the plain states where we are seeing slight drops in estimates of total planted acres this year. We continue this kind of analysis on the size of the pie. This is something we've gotten interested in the last few years, is kind of accounting for all the acres with the question of why does the total change so much from year to year. But for this year, you can see principal crops, intended acres, 316.9 million. Then we add in what was in the CRP program as of last fall, 23.4. Then the big unknown is the prevented planted acres. We kind of logically would think the 316.9 million acres of crops would reflect intentions for no prevent plant, but from history we know that that's probably not correct. And so there likely will be some prevent planted acres in 2017. We've penciled in a number kind of mid-range of what we've seen in recent years, towards the bottom end of that range, 2.5 million acres. So we're looking at total cropland acres in our accounting of 342.8 million acres. That's down about 3.7 million from last year. So I think this is consistent with what USDA has been projecting and others saying in an era of low prices, low returns, we do tend to lose some acreage. We do see that price response, and that seems to be happening this year as well. In the case of corn, the planting intentions came in right at 90 million acres, and that's just a shade smaller, almost 1 million acres smaller than what the average trade guess was reported by Reuters. So the direction was well anticipated, but the intended shift is just a little bit larger than the market expected. And you can see, again, this is the NASS Map put together. We're seeing intentions of corn down 4 million acres from last year, and all the states marked in red are showing fewer acres, and that's the majority of the corn-producing states are showing modest declines in intended acreage of corn this year. When we want to get to the final number on acreage, we have to recognize that planting intentions is just the starting point. And when we look at history, we do see that actual planted acres of corn has varied from a small amount to a large amount compared to March intentions. Last year, that was a relatively small number, 403,000 acres. It's been as large as 3 million acres. And that particular year was when we did see the kind of the ethanol boom take place in 2007, and producers responded by adding more acres of corn. But for the most part, the difference will be based on what kind of planting season weather we have, whether we have a large prevent plant, whether corn planting gets delayed and pushes acres to soybeans, whether price ratios change enough to motivate producers to plant more or less acres of corn. At this juncture, we would guess that the difference between planted and actual intentions will be relatively small, probably in the range of 500,000 acres on corn. On soybeans, planting intentions 89.5 million acres. That compares to the average trade guess of 88.2 million, and that's a full 6 million acres more than planted in 2016. So the surprise here was more acres than the market expected, and you can see that the increase is pretty widespread. Most producing states showing more acres. The big increases coming in the plain states, and that's where we saw the drop in winter wheat seedings. So some of this is switching from winter wheat, switching from feed grains to more soybeans. Again, we know that final planted acreage number will differ from intentions, and those acreages have been fairly large in many years, ranging from 200,000 acres to 2.6 million acres difference. And again, the factors that will determine that are yet to unfold, and it would be premature on our part to try to guess, I think, which direction and by what magnitude that will go. Some are arguing that with the change in prices since the report was released or since the survey was taken, that soybean prices have faded more than corn prices. Perhaps this will move some more acreage back to corn. But again, I think this is a little premature to make that judgment at this point. The challenge now is to go from planted acres number to a production number, and then from the production number to a balance sheet for the 2017-18 marketing year. And I'm going to turn that challenge over to Todd.
Thank you, Darrel. So when we think about how many harvested acres of corn there'll be this year, this figure 19 shows planted minus harvested acres for corn over the last, from 1998 through 2016. And you can see it's relatively consistent. And in the last few years, it's been about 7,250, around 7,200 acres of corn planted, mined, harvested. For our 17-18 projection, we're using 7.5 or 7,500 acres difference to get to where we think harvested acres of corn will be in 2017. And the other key component of this is yield. And what you see here is the U.S. average corn yield nationally for the United States from 1960 through 2016. And we fit a trend line to it. And we're projecting yield for 2017, if it stays on trend, to be almost 169 bushels per acre. Now, having said that, the last 3 years we've been above trend quite a bit, both in corn and soybeans. So the idea that this number could come in higher is not far-fetched at all, but currently we're sticking with the trend yield of about 169. So when we look forward to 17-18, the left-hand column is what the USDA Outlook Forum put up for their 17-18 corn balance sheet, and the right-hand column is what we're projecting. So at 90 million planted acres of corn with a 7.5 million acre difference, we see harvested acres at 82.5 million acres with 168.7 yield. It puts total production at 13.9 billion bushels. When we carry forward the 2.39 billion bushels that we estimated from the 16-17 crop year, we maintain the export numbers at 50 million bushels. It puts a total supply for corn in 17-18 at 16.363 billion bushels. Moving forward on the consumption side, for feed and residual, we've upped that 50 million bushels from USDA's 5.45 billion projection. I think mainly based on the growing strength in the livestock sector and seeing what's going to happen with ethanol grind as we move forward and DDG availability. Food, seed, and industrial, we have at 6.895 billion bushels. The majority of that coming from the ethanol grind at 5.425 billion bushels. Recently, we've seen the numbers for feed and seed and industrial less ethanol go up. I think that's a price response in things like cereal and glucose and other categories in that sector, but it's still a small percentage of the total consumption. We do have ethanol going up 25 million bushels, continuing a trend of incredibly productive ethanol production through the country. Over the last 4 months, we've seen over 1 million barrels a day produced by the ethanol industry, which is putting us at that 5.4 billion bushels of corn use. In 16-17, they carried it forward to 17-18. We added 25 million. And the 1.9 billion bushels of corn exports, we've stuck with the USDA's numbers. There's a lot of reasons to think exports will come back from the 16-17 number. Predominant in those is the large crop that's projected in Brazil and the competition for them in the export market. Adding all those consumption figures up puts us at a total of 14.295 billion bushels, which brings ending stocks to 2.068, which is down from 16-17 and lower than what USDA is currently projecting. And it puts us thinking an average price of around $3.60 a bushel in 17-18 for corn. Moving forward to soybeans, planted minus harvested acres, relatively stable. It's been as high as 1858 back in 2000, but in the modern period since the renewable fuel standard, we've seen some variability, but last year is about 651,000 acres, relatively small when you compare it to corn. And for our projections this year, it was 750,000 acres. So we turn to yield, and this is sort of the tough one to for me to wrap my mind around. What's been going on the last 3 years with yield well above trend, concluding with 52.1 bushels an acre in 2016. As you can see from the chart, when we fit it with a trend, the last 3 years have been well above it. And if you use a linear trend on the model, it's saying 46.1 bushels per acre. There's a lot of reasons to think maybe this trend is not the correct way to go. So when we look at it with a quadratic yield trend over time, one, the model's a better fit, but two, the bushels per acre is higher at 48.2 bushels per acre, moving to 1718. And we're going to use that number for our projections this year on soybean yields for the 1718 crop year. It's hard to say at this point if we've seen some kind of technical shift in soybean production, but the last 3 years have been outliers in the long-term trend. It'll take time to see if we're going to come back to trend in any way, but currently we're using 48.2 bushels per acre on soybean yields. So when we start to look at the balance sheet for 1718 on soybeans, once again, the left-hand side is what the USDA said at their Outlook Forum, and the right-hand side is our projections for 2017-18 soybean balance sheet. The planted acres are 89.5, harvested acres is 88.7 million acres, with a yield of 48.2 bushels per acre, puts the production at 4.275 billion bushels, carrying over the 435 ending stocks from 16-17 and maintaining exports at 25 million bushels. We get a total supply of 4.735 billion bushels of soybeans, which is a lot of soybeans. When we turn to consumption, we pretty much stay with the USDA's projections. Crush is up 5 million bushels from the 16-17 crush estimate, export to 2.125 billion bushels, and seed and feed residual at 135 million bushels, putting the total consumption at 4.205 billion bushels, which leads to ending stocks of 530 million bushels, which is an increase over the 16-17 ending stocks number, a significant increase, and a continuing trend of building stocks in the soybean market in the United States, which puts stocks to use at about 12.6%. and has an average farm price we're projecting for 17-18 of $8.95, which is significantly lower than what we're currently seeing for 16-17 soybean prices. So overall, the March 1st stocks report showed larger stocks in corn and soybeans than expected, and for corn, we lowered the feed and residual forecast by 75 million bushels. Currently, according to the planting prospects report, farmers are going to plant 4 million fewer acres of corn, 3.4 million fewer winter wheat acres, and about 900,000 fewer soybean acres. 6 million more acres of soybeans, 2 million more acres of cotton, and 156,000 more acres of other oilseeds, predominantly canola that we're seeing in that number. So the balance sheet implications are we expect a smaller corn crop and a larger soybean crop in 2017. We expect the corn stocks to decline modestly and the soybean stocks to become a surplus. So we're looking at maybe unchanged to higher corn prices in 17-18 and what looks to be significantly lower soybean prices in the 2017-18 marketing year.
Well, we have plenty of time here set aside for questions. So go ahead and start typing those in, and we will get to them. While we're waiting on that, maybe, Darrel, we could talk about something in the Prospective Plantings report that we both found, all three of us found interesting, was the, potentially decline in feed grain related acres.
Yeah, I think most people just focus on the corn acres, but when we have to, I think, consider feed grain acres in total. So corn and sorghum, certainly a sharp decline in acreage. And then when we realize we also feed some wheat, primarily winter wheat, the 3.4 million acre decline there, and prospects for a smaller crop, I think kind of add to the bullishness of the corn acreage intentions number. So you were a million acres less than expected, but also see these declines of other grains. I think really now comes back to putting a lot of importance on what kind of yield we have for corn this year.
Right. Well, we do have some questions coming in. The first one is why a carry-in of 530 million or carry out of 530 million bushels for beans instead of boosting use at lower prices. So who wants to jump in on that, Todd?
I can. When you look at the consumption for beans, the crush at 19.45, and we're looking at crush capacity in the United States. How many more beans can we possibly crush it above 19.45? Darrel might have a better idea, but I don't feel like we can crush too much more than that. And then when we look at exports, we're going to be in competition with Brazil for most of this marketing year, moving into the last part of the year. And you have to assume, while we've seen recently free on-board prices at New Orleans have been very competitive of what we've seen in the Brazil shipping market, they're going to come. Those prices are going to converge, and you fully expect to see Brazil come online and start exporting more soybeans and have them at a competitive price as we move into 17, 18. Where are you going to get the additional consumption from exactly? To say that we're going to increase use implies we're going to somehow crush more soybeans or somehow export more soybeans. Darrel and Scott might have a different take on it. But
no, I think that's well said. At first blush, you might even ask, why are we holding the export number so high on soybeans, given the size of the competition that's expected from South America this year, a full rebound in production, a lot of competition. My instinct would be to put in a lower export number, if not for Chinese demand. And so what we're really saying is a lot more competition in the export market for soybeans, and fingers crossed that China remains a large buyer of soybeans.
That's right. So I think the way at least I've summarized my view, is that looking at that ending stocks projection of 530 million bushels, the risk from the consumption side is for increasing that number rather than decreasing it. So we took a long time on that one, so better move on. All right. It says, what about spring wheat planting? Is it warm enough up there for them to plant yet? No. So any comments on spring wheat planting?
If I remember right, it came in at 11.3 million acres. Maybe it was 11.2. I thought it was high. I was a little surprised by that number, actually. We'll see as the planting goes on. If I think Montana increased their other spring wheat, not Durham, but other spring wheat acreage significantly. We saw in the northern plains, the Dakotas and I think Minnesota lowered their other spring wheat planting. So I was a little bit surprised at the number being that high. I thought it would come down a little more. I don't know what else to say about that. We'll see. We'll see how it goes.
All right, here's the next question. With corn prices expected to be low, will that keep ethanol production up? And if so, will livestock owners keep using the cheaper DDG as feed that comes from ethanol? Well, let's take the first part of that. Corn prices being low. The total amount that we use for ethanol in the U.S. is less a function of the level of corn prices than it is the level of gasoline prices. There's a relationship there because 10% of the cost of gasoline is now effectively ethanol. But the big influence on the amount of ethanol that we grind or produce through the corn ethanol grind is based on just the total size of the E10 market in the United States. And that's largely a function of income and the price of gasoline. The price of gasoline has been relatively cheap recently, and so that has expanded the E10 gasoline consumption in the U.S., and that's what's been driving ethanol use and ethanol grind up. The signals on that right now are really quite mixed. Depending on which indicator you use, current EIA statistics are really not very optimistic for continued growth in E10 consumption in the U.S., but at the same time, we see other statistics like miles driven continuing to increase. The fundamentals are still at least moderately positive for gasoline growth in the U.S., I think, in the coming year. So I think we'll see E10, the amount of ethanol used in E10 grow at least 1 or 2% in the next year, and that's the basis for our increase, continuing to increase the total ethanol grind, which, as Todd indicated, has just been really increasing rather sharply in the last few months, and certainly some of that is related to the export market for ethanol, which has been on fire the last few months. And that does mean that we'll continue to see large supplies of DDG. And we think that particularly with the stagnation and declines of the DDG export market, DDG prices are really cheap. And so I think it definitely will be a lid on corn feed and residual use. I don't know if you guys want to add anything to that. All right. Let's see. The next question. Do you think the slightly larger soybean stocks number suggested last year's soybean crop was underestimated slightly? And I like the use of slightly there in that question. Whoever was our questioner, thank you. Very precise.
Yes. It's hard to imagine it. When I think about 52.1 bushels an acre nationally, I don't think it may have been. I mean, we'll see, but I don't expect those numbers to change. I mean, Darrel?
No, I think history would say on the surface, the larger stocks would suggest maybe the crop was underestimated, but history would say that oftentimes gets corrected in subsequent stocks reports. And we have done a little bit of work looking at the surprise in the stocks number and whether that was related to an ultimate change in the size of the crop or not by NASS, and we didn't find much of a relationship there. So, if this persists through the June stocks report, then we might say, yeah, there's some indication. But the bottom line is, does it really matter? Stocks are where they are, regardless of whether use was less than expected or the crop was bigger than expected. Stocks are what they are at this point.
Yeah. I would just add one comment on that. The logic does seem to favor the idea that if you're seeing larger stock numbers, they had to come from someplace. you would think, and so that would point to, well, maybe that crop was slightly underestimated. But we have to remember there's a substantial sampling error in these estimates. They're still estimates. And again, our research shows even though you're halfway through the marketing year and you'd think that you would be able to begin to have a pretty good bead on that question of whether the crop was overestimated or underestimated by now. But the reality is, I think that the variability in those estimates means we don't really yet, halfway through the marketing year, know enough to say one way or another. It might be pointing that direction. Our research says you don't really know until that September 30th final stocks number comes in, and we'll just have to wait. Okay, next question. How much change in new crop ratio between corn and soybeans will it take to see farmers switch back to planting more corn acres in 2017? Well, you guys, we have the experts right here who just wrote recently an article on exactly that question, so take it away.
Well, price ratios don't explain as much of the change in corn and soybean acreage as you would expect, particularly for intentions. But we always have this idea that farmers will change acreage if ratios change after the survey was taken. March 1, November soybean futures were 2.57 times the price of December corn futures. When I left the office to come over here this morning, that ratio had declined to 2.44. In my mind, you'll have to see that ratio probably drop below 2.3 before you would expect farmers to respond, and that's going to have to happen fairly quickly to get much of an acreage response. So at this juncture, the market still favors soybeans over corn in many locations, and unless we see that rally, those ratios change dramatically, I don't think that will be the deciding factor. It'll turn out to be weather more than anything else.
All right. I just want to remind people that if you want copies of the slides, that there's a button on the right-hand side of your screen that you can download the slides to take a look at. On that same theme, planting time weather issues that will impact corn, soybean acres, and what's the prospect for planting weather rallies? Give us hope, Todd.
I'm going to. I mean, when you look at the data over time, there tends to be rallies revolving around weather. Now, I don't know how this happens. Well, I have an idea. We start seeing, there's a drought or there's excessive moisture in major planting regions, and the media picks up on it, and we start getting these little run-ups between now and June, sometimes even in July. Will there be a weather rally? Just based on the probabilities that we've seen over time, probably so. One or two. How big they are, it really does depend, but we see them every year, it seems like. At least I do. You guys can talk to that more than I.
No, I think that's well said. The market will respond to adverse weather, whether it's adverse for corn, getting the acreage planted, or whether it turns out to be just a yield concern later on. The market will respond, and we're just not very good at forecasting the weather, even over the next month, to know how planting progress will go. But it does seem the market will respond a little earlier. Somehow we've decided if we don't get the corn planted in the first half of April, we've got a problem. I think Todd is right. You would expect to see rallies, but you also got to say, without some problems, rallies are going to be difficult to come up with.
All right, I'm going to jump back to you, Todd. We've got several questions related to trend projection for 2017-18.
Yeah.
So let's start with the soybean side. On soybean yield, was quadratic the better trend fit before the last 3 years data points? So in other words, if we didn't have those.
It wasn't. I mean, it's not at all. The linear trend fit was just as good. Right?
Yeah.
So those last 3 years really makes the quadratic fit the better fit, statistically speaking, if you're using explaining variation around the trend. And so no, which is a little bit of a head scratcher. What's been going on the last 3 years in soybeans? I've been going around the state talking to people. Nobody's giving me a good answer. I've offered cash rewards if someone can convince me of something that's happened. I think it's just weather and management practices have improved but weather in particular for soybeans, these huge crops we've seen over the last 3 years, quite impressive. So answering the question, no, linear was fine. The last 3 years made the quadratic fit better.
Like I said, we've taken some time to talk to the crop scientists, and I think they are as puzzled by this as everyone else. That there hasn't been any dramatically obvious introduction of new genetics or new production practices. And so I know that last fall there was tremendous discussion and chatter I had back and forth, and others you could track, where did this come from? And the honest answer is, at this point, we simply don't really know. But they are data points, and it is making right now that quadratic trend fits better. And until proven otherwise, I would say that's the direction we're leaning.
Yeah, when you look at the data historically, I mean, you do see periods where the yield's been above trend for 3 years, at a time. And to start saying, well, we're in a new era, but it's nothing like we've seen especially last year, just the huge deviation from linear trend. We've seen it a few times. So to say we're in a new era, may be a stretch. I may be back here next year and we'll be using the linear trend once again to talk about soybean yields. But for right now, it seems to be that the quadratic is the better fit on the data.
Yeah. So. I mean, it really, Darrel, did you want to jump in there?
No.
Oh. Yeah, because if you take the linear trend as a soybean trend model, we just obliterated the previous record in 1994 of a positive deviation from that trend. And, just absolutely an amazing performance. We did also have a related question, Todd, on corn. How does the corn projected yield respond to a quadratic calculation?
It's no better than the linear trend fit. So when you fit, let me go back to that.
There.
If you fit a quadratic to that, it's basically a linear trend as well. So there's really, the linear trend's the best fit for corn. And we've seen this for years and years and years, if you start in 1960. So, the linear is a better fit.
Okay. What indicators do you see leading to the drop in feed and residual use, or what is prompting you to reduce that amount?
That was yours.
Okay. I guess I need to answer that one. The first indicator is just simply measured stocks, that the March 1 corn stocks number came in higher than one would expect based on the current USDA projection for 16-17 feed and residual use. So that's the initial reaction. It on its surface appears to be a bit of a head scratcher because we are seeing some nice growth in livestock numbers. Those animals have to be eating something, and that's something that we think is just large ethanol grind and cheap DDG prices. We're basically substituting DDGs for corn in the ration, and we think the answer. And again, you're talking about, a surprise of maybe anywhere from 40 to 100 million bushels. So that's well within the realm of what you could imagine is realistic with the cheap DDGs that we're having. I don't know if you want to add something to that, Darrel.
No, I think we have to keep in mind that based on our calculations, feed and residual use during the first half of this year was up more than 4% from use of a year ago. So it's not like feed and residual use is under pressure.
Perfect.
We are using quite a bit more, but it's just that USDA has been using a very aggressive projections from day one on how much would end up in that category. So.
Yeah, I think that's the real context is that is important to remember. Yeah. Thanks for bringing that up.
Yeah.
Any thoughts as to why producers have held on to soybeans when the market had until recently signaled to sell soybeans, and most projections had soybeans as a profitable crop in 2016? That was your point you had already talked about, Todd, about there's some evidence that some old crop farmer holding off farm.
Yeah, I mean, I don't know why they held on to it. I know Darrel and I have both written about this continuously over the last 4 months to market not just old crop, but some new crop if you can bear it. I don't know why they held on to it. I mean, when you look at the stocks numbers, on-farm, off-farm on soybeans, off-farm was up significantly over 2016, but on-farm was down over 2017 over 2016. You don't assume processors are holding on to that, so it must be farmers holding most of that and paying to hold it in storage facilities. I personally don't understand what's going on. Maybe Darrel has some insight into that.
Well, you'd first of all say, okay, look, somebody has to store the soybean crop, right? We don't use it all in one day. The crop is used over a 12-month period, so it has to be stored. Without a carry in the market, nobody else is going to store it. Farmers are the only ones that will store it. So to that extent, it's perhaps not a surprise that farmers are the ones that are willing to speculate on price level. Nobody else is going to do that. They're going to stay in a hedged position. So the other thing we don't know, of course, is how much of that's in storage is priced. Maybe it's been sold for later delivery. Maybe it's hedged. We don't know any of that. All we know is that it's physically there, which it has to be. So we don't know who owns it for the most part, but we would guess that farmers own the majority of it.
That's a good point. Also, I mean, it's not like we can crush and sell all the soybeans in 6 months. Like, it's going to be there, right? So that's a good point.
Any thoughts on President Trump's agenda as it might impact exports to Mexico and China? It said farm programs off the table until 2019. I think there's two different questions there. Anyone want to tackle the trade question?
I'll give it a shot. I had this question late last week when I was speaking in Bloomington. Mexico is a major importer of U.S. corn, and our corn is the cheapest corn they can import. So the idea that somehow Mexico would switch to Brazil and Argentinian corn means to me that they would be paying more per ton for corn. Now, while that might seem like a, politically, get back at Trump for talking about NAFTA, be upset about what's going on in politics in the United States with the wall and all this other stuff. I don't know why Mexican processors or even Mexican people would want higher priced corn. So I'm a little bit hesitant to say that Mexico is going to turn away from U.S. corn at this point. As far as China, right now I think we're just going to go along like we normally do with exports and the market as the way it's currently formulated. We're in competition with Brazil. China needs soybeans. Are they going to continue to grow at the tremendous rate they've been growing? That's a good question. But right now, when I look forward, I don't see Trump's agenda impacting our trade too much, barring some kind of major shock politically. About farm programs, who knows?
Yeah, we have a policy group that studies that, and so I just continue watching our Farm Doc Daily articles. Those will be reported. We also have a Farm Policy News site that is managed by Keith Good, and so you can keep up to date in both places. I have a question here. It says, you've talked a great deal about biodiesel and the RFS in the past. This seems to be not reflected in the soybean crush number. Shouldn't it be ramping up? From our friend Todd Gleason. Thanks, Todd. An interesting question. Certainly, biodiesel demand has been ramping up, but part of the reason why we haven't seen it in the U.S. crush number, say in the last 6 months, is that we've seen literally a flood of biodiesel imports from Argentina due to a policy of our tax credits and their internal export tax policies. So that's really the reason why we haven't seen that kind of impact in the U.S. It does mean that the total draw on soybean oil stocks to make biodiesel in the globe is increasing, but the pressure in terms of biodiesel and soybean crush is being felt in other countries and not the U.S. Here's a question. Does DDG replace soy meal in feed or corn, as DDG has higher protein content?
I guess, as Todd just said, the answer is yes. That DDG is, of course, a much lower protein content than soybean meal, but a bit higher than corn. So we think it replaces both, but percentage-wise more corn than soybean meal.
Okay. Here's another question. It says, beside the market price, are there other factors, if any, that are contributing to lower projected amount of corn planted acres for this spring?
I think you would have to argue that kind of the tight financial situation and the relatively higher cost of planting corn probably is a contributing factor to that. So it's kind of a net margin thing, but it's also a cash flow issue in terms of
right.
So I think both are at play there.
Here is an interesting question. It says, if you were impressed by the large leap in soybean yields, what can be said about the incredible leap in wheat yields? I believe that last year's wheat yields beat the previous record by 12%.
Yeah, that's impressive. Which, sort of goes back to, it's weather, right? It's not seed technology per se necessarily, right? Or, we've got this yeah, it's impressive. I don't know.
Yes, the wheat, it clearly was. But you always have to remember in wheat that there tends to be a negative trade-off between yield and protein content. So we had, which then developed basically a shortage of high-protein wheat around the world, which boosted the value of the spring wheats, which are higher protein for blending. That launched a whole series of kind of interesting dynamics in the wheat market. But definitely the yields were impressive. You're hearing of people with 100 bushel plus yields in Kansas. Again, and I would be the first to admit that I don't really know that much about wheat other than I haven't read anything that would indicate anything special had happened to wheat other than they got a lot of rain last spring and the growing conditions were tremendous.
I think that we haven't looked at it in detail, but I think that is one of the differences between winter wheat, where the big yields were, and soybeans, is that we do use a bit of a weather model to explain soybean yields, and yields were higher than expected given the weather we had. I think perhaps weather explained more of the big wheat yields than it did for the soybean yields.
Yeah.
We've got time for maybe one more question. It said, again, will U.S. trade policy, much discussed, have any impacts on corn or soybean numbers for the next year? I think, Todd, you'd kind of said you didn't think so?
That's what I've said, and I'm sticking with that. Until something changes. I don't see, what policy? I don't like, us removing ourselves from TPP, us talking about renegotiating NAFTA. Yeah, those are they could have an impact for sure. Right. But short run through the rest of this year, I don't see much change in it. Darrel might.
One point I would see is you can just see it in the watching the flow of news, there's a tremendous pushback politically that is developing out of what I would call farm country politically. A lot of concerns expressed by people that are important to Trump's political coalition about the importance of ag trade. Like I said, there is more uncertainty than we would have said 6 months ago or before the election, but remains to be seen.
That's right.
All right. Well, we got through almost all of the questions. As always, we so appreciate all of the people that tuned in this morning. Do remember that the slides are available at the Farm Doc webinar site. And then I think we have a final slide here I want to get up there. Make sure you visit the downloads page listed there at www.farmdoc.illinois.edu/webinars. And then hopefully in the next day or so, a complete video of this webinar will be available for your viewing pleasure. And tell all your friends and family. And again, thank you so much for tuning in. And we'll watch these markets in the planting, and I'm sure it'll be interesting as always. Thank you very much.